billion. Let's bring in Gilbert, Joekpata now, financial market analyst. Bring us up to speed. Hello, Gilbert.
Yes, good morning, Mr. Ladi.
Good morning, Gilbert. So quite an incredible turn of events, over the weekend. There were indications that, Bitcoin would not be able to break that 21,400 resistance at 21,005, but it did break beyond that and 22,000. And I'm wondering, what is the catalyst here? What is driving this market?
Oh, it's interesting how Bitcoin is ignoring the market chaos. So many companies are filing for bankruptcy. We even had Gemini and Genesis took their drama to the public. FTX itself is fully bankrupt. But despite this, market participants remain bullish, and Bitcoin continues to produce block after block, regardless of market direction. But one major driver I will really look at is the macro is actually getting better. Over the past 6 months before now, the Feds have had very aggressive rate hike, and they kept reiterating their commitment to continue to increase rate until inflation is put under a certain level of control. But recently, you could see that they stepped down from 75. We got 50. Presently, we now have 45. And there are also signs that we may see lower interest rate hike below 45. So the macro is becoming more friendly than it has ever been before. And risks on asset like this begin to have a little bit of fresh air whenever we see interest rate hike becoming friendly.
And talking about risk on assets, Gilbert, I did remember one time, Bitcoin was being touted as that inflation hedge, and obviously 2022 was the year of inflation for most for global economies, but we did not see Bitcoin shine as an inflation hedge, but it acted like the equities market globally. Why is it not acting as a hedge against inflation?
Okay, there are different ways to skin a cat. First of all, if you really zoom and look at the long term, you will agree with me that on the long term, Bitcoin could be an inflation hedge. But once you are approaching it with the short term, we will really have a problem with that. The second reasons why we could really see Bitcoin not performing on the short term as an inflation hedge is because we are dealing with the same crowd of investors. Let's take a look at the fact that you agree with me that the S&P 500 and NASDAQ is really correlated to the cryptocurrency market. And then there was a narrative of crypto being a non-correlative asset. But what is happening is that lovers of tech stock, which means if you love Facebook, if you love what Amazon is doing, if you love what Microsoft is doing, and you look at the blockchain industry and the kind of technological innovation these people are bringing in, you will also have love and flair for the kind of technological advancement that is coming from the cryptocurrency market. So we are dealing with the same crowd of investors. So you know how these people behave during risks on environment, they sell. So it's the same crowd, actually.
So I guess Bitcoin can't be that hedge because of the investor mentality. All right, thank you so much, Gilbert. I guess this is still an argument that's still gonna, go on, regardless, looking for that inflation hedge. Well, thank you so much, Gilbert Joekpata, financial market analyst. Thank you.
All right. I hope we have more of this discussion someday.
Of course. Thank you so much.